Welcome to Rig på Viden, a podcast about research in finance, investing and economics. I'm Henrik Rasmussen and I'm your host for today. This episode is produced in collaboration with Deloitte. Deloitte helps Rig på Viden get a practical perspective on academic research while also getting inspiration. This explorative collaboration bridges the gap between academics and practitioners, and we really appreciate Deloitte's support of expanding academic knowledge. This time I have Morten Holm with me, who is an associate professor of accounting at Copenhagen Business School. Welcome to you, Morten.
Thank you. Glad to be here.
You're welcome. We're also joined by Ulrik Linder Jakobsen, who is partner at Deloitte. Welcome to you too, Ulrik.
Thank you so much.
We're going to talk about digital transformation, particularly in the finance functions. So it's going to be very relevant for people working with auditing, controlling, reporting, and so on. We will cover some of the possibilities, some of the concerns, and the current trends on this area. Artificial intelligence is currently all the hotness across both the stock markets, and a lot of companies are looking to integrate AI in their business models. So Ulrik, how does this AI trend affect the finance functions such as auditing and reporting?
I think that's a very good question. And I think two major trends are kind of converging. So for a number of years, finance function has worked towards getting more and more efficient. And part of that has been a shared service, GBS kind of approach in how to organize. And basically, first of all, getting the labor arbitrage by going outside of Europe. But as we have seen in the past many years, automation has really been key. And of course, with tools like generative AI, we are now seeing that as a huge potential for optimizing, automating further processes, basically making the manual labor more or less redundant, and also moving that automation from basic processing up to the let's say higher levels of the finance value chain. So definitely AI, and specifically the generative AI proposition is something that is a key concern, especially on the classical part of the shared service agenda in finance organizations.
Yeah,
all right.
But I guess also for internal reporting, generative AI will be a game changer, because now, or in the past, controllers have been preparing these management reports every month and giving some direction to the business. But now the business can just have the numbers, and then they can ask generative AI, what does this mean and what can we do to improve the situation? And then, at least in a very near future, that will be the case. So it takes in some way also automation to the next level, from the basic transaction level to now more sort of advanced value-adding tasks even.
Yeah. Morten, you shared a survey with us that found that only 36% of companies asked had achieved a significant change or a complete digital transformation of their planning, their budgeting, and their forecasting functions. What do you think about that result?
Yeah, first of all, this is a very important issue, I think, because when you sort of read some of the groundbreaking white papers from Ulrik's company and other companies, you tend to get the impression that, generative AI, for instance, is already in the process of being implemented, and that automation is something that we're already done with. But the fact is that there's still quite a long way to go. This means that 64% are either implementing minimal or no improvement, according to this survey, and this is quite large companies globally that have been surveyed in the sample. So I think what's interesting, of course, is to see, well, what can we learn from the leaders, and what the study looked at is, for example, how do they deal with this? What the leaders that say, well, we've been through a full transformation, what did they do? And one of the key takeaways was that, for instance, when it comes to data, they look at data as an asset with all what that entails. So, having, one set of numbers across the whole corporation, good data governance, and also basic things like moving away from disconnected spreadsheets to run the business and into more advanced systems. The laggers, the ones that have done little or none, 61% of them still say they only use basic spreadsheets for their planning and analysis units, which tells us that there's a long way to go. But it's also interesting, in the same survey, the leaders, the 5%, it was only 17% of them who use machine learning or AI. So even the best in class still have some way to go. So there are key barriers to implementation that we also need to remember when we discuss technology and finance transformation.
Yeah. Ulrik, isn't it also extremely difficult for the very large companies to change their whole processes, what they've always done, and use AI and a lot more automation? Like I would imagine that it's the small or the new companies that really get out from under this trend and adopt it from the start and maybe outcompete the bigger players.
Yeah, I'm not always certain that's the case. I think typically this require some quite significant investments. So you have to have a company of a certain scale to do that. But I do think there's an interesting cycle here. For a number of years, especially within planning and budgeting, there has been a process to digitize, get rid of the Excel sheets, as Morten mentioned, but also to try to remove some of the people element of it, basically trying to make budgeting and forecasting models that made the old controller a little bit redundant, because you could basically build a model that would reflect the insights of that controller, who maybe for many years had been the one optimizing the planning. And then what we have experienced, especially for the past 5 years, is a number of sort of disruptive actions. COVID was one of them. We have had the whole sort of issue on the supply chain across the globe. And some of those things, they weren't really hard-coded into these budgeting models. So we've also seen a number of the ones who have actually been pretty good at automizing and creating these intelligent models now had to scrap those models because they basically were not adaptive to disruption, but only able to extend the known world into an optimized scenario. So I think a lot of those who actually did take some steps had to go a few steps back and now rethink, what are we going to do? And I see that they may choose to adapt a more modern set of technologies. But I think it's an interesting process. But I don't subscribe to the idea that the small ones will be more agile and fast, because you had to have a certain set of capabilities and you need to have a certain set of let's say, investment potentials to go into something like this. So there's volume in it for it to make sense.
I don't also think there's a distinction to make in the SME segment when it comes to, for instance, companies that are born digital will be, that will be a totally different story, and that's a really interesting segment, because they don't have the legacy systems and all this sort of all the from the old world, so to speak, all the legacy there. So they could, I think there you would find some really interesting applications of technology. Whereas
that's true.
Yeah, 30 or 40-year-old, the machine station somewhere in Zealand or Jutland or whatever would be a whole different story.
That's true.
How about, Morten, what new technologies can be used today to transform the finance function, auditing and reporting in companies? We talked a bit about generative AI, but what else might change things? There's a lot here, so Ulrik can probably supplement here. But I think one thing we already touched upon is the automation agenda, which is probably, that is an agenda with a really high impact, and also something where there have been some tools ready for quite some time. RPA, for instance, robotic process automation, is, the adoption rate there, I think Ulrik knows more about that than I do, but that's pretty high. Mm-hmm. That's where you start simply say, okay, what humans do in the systems, we copy that, or we replicate that and let a robot do it instead, and then we save some time there. But more advanced methods in that area also coming. For instance, process mining, which is a very interesting area that is only emerging at the moment, and with some of the biggest companies. We had an event in Danish Accounting Network
in Aarhus a couple of days ago on that, where Lego showed their work. They are a really good example of a company that's gone pretty far already in this area. Process mining is essentially taking log files from your, for instance, your EP system or your CRM system, and then mining that data to identify what kind of activities are we actually doing, not what we think we are doing, and in what order. And then we can get a lot of information about the efficiency, how can we improve efficiency, and how can we automate? I mean, what are the candidates of processes to automate? So that's on the automation agenda, in addition to AI, which you already talked about. And then, I mean, if you look at what controllers do, there are essentially three purposes where you can say that technology can impact that in all three areas: planning and budgeting, decision support, and reporting and control. And in the planning area, I think machine learning algorithms is worth mentioning. For instance, I mean, the ability to suddenly take unstructured data from the outside of the company and like text, and then convert it into something you can actually analyze on. For instance, to try to predict something like consumer behavior is really really interesting. Predictive analytics, all this enables companies to actually build more value driver based forecasting methods, and create much more advanced scenarios. The thing is, of course, a thing like Corona, like you mentioned, or like how do you model that? Regardless of how advanced your ML model is, you probably can't foresee the increasingly sort of changing world we're living in. But nevertheless, this is some of the stuff in the planning arena. And just decision support is another area where I think business intelligence, for instance, and visualizations and all that is probably the most mature, but also AI again. And what's called prescriptive analytics, which is not just about predicting what is going to happen, but also prescribing what to do about it from the company's side. That's really interesting. But all this, of course, I mean, is enabled also, or very importantly, by this immense data that is suddenly available, not just inside, but very importantly also outside the company. I think a key skill from a controller's perspective is to be able to actually exploit external data, because traditionally they've been looking very much inside the company, and there's a lot of value of looking outside.
Yeah. What do you think, Ulrik?
Well, I think I fully agree. In these are some of the technologies that are being adopted, but I also see a fundamental change in the ERP backbone, which is maybe a segue into that part of I mean, that is the core system for almost every finance function, and we have been on a journey. I started out in ERP back in '94, and back then we were sort of in the client server realm, and we had started getting the processes into the system, and but we still had a lot of disintegrated tables of data that you had to basically reconcile inside of your ERP system on a daily basis or a monthly basis. So there was a lot of inefficiencies in that, and some of that has then been handled by RPA and similar. But I mean, companies are these days investing hundreds of millions of kroners and euros even in upgrading those systems to new generations, which are cloud-based, which has basically a high degree of meaning in terms of how much standardization are you forced to make on your processes. But mostly, and most importantly perhaps, most of these new systems, they have a completely new table structure. Basically combining data into some major tables like SAP's Universal Journal or others, which basically means that a lot of the old structure of the ERP system has changed, and your data accessibility, your ability to reconcile, to substitute, to basically do your period close. A lot of the stuff process-wise is heavy on finance is being lifted in different ways from the ERP system. So there's a whole movement there, which basically also lay the foundation for a lot of the tools that Morten mentioned, which require that you have that abundance of data, and the ERP system is still your core source for that. So I think there's a combination of these adaptive tools and differentiating tools, and then basically getting your ERP core right. And that is, I think, a process that is ongoing in most companies. I think we assess that there's probably about 500 ERP projects ongoing simultaneously, because all companies basically have to change due to the change in technology, and of course also all of the vendors choosing no longer to support their old systems. So they have created an interesting push. So I think there's a lot, both these more adaptive tools and then the ERP core is changing. So almost everything is changing all at once.
How about technologies such as the blockchain or the cloud, for example?
Yeah, I mean, I think in terms of blockchain, I think there is basically everything that we have been talking about is about optimizing inside the organization. So this is about a finance function who's working on a finite organizational unit, on a finite set of data, on a finite set of periods, within which they can optimize and do a lot of stuff. I think if we look at blockchain, it's an enabler for much more of a business ecosystem. And if we think about it, that is basically the reality of most companies these days. They don't exist within a closed circuit. They are part of multiple ecosystems that they transact with. And I think that blockchain is probably the next tier to go to in terms of integrating across these business ecosystems to create both transparency in a completely new way, but also to achieve completely new levels of efficiency. Because basically all of the processes that you have where you have to reconcile, especially outside and inside of companies, to make the double bookkeeping stick, can actually be kind of, you can alleviate those through technologies like blockchain. I mean, for large corporations that has actually a number of organizations and legal entities within them, apply it to internal cost accounting. Basically, you can remove a lot of processes by having a single ledger that you share as a company instead of multiple legal entities doing double bookkeeping across your own internal processes. And then you can extend that outside of your organization to everyone you work with. It's a pretty provoking thought, but in general, it's possible. Technologies are there, and we have seen it applied, I would say, mostly on supply chain-like processes. But in the end, whatever is in finance is the result of what happens in the supply chain. So it's basically only a question of extending it. And then, of course, this also segues into the discussion about ESG and ESG data, because you have to include so much more data in your accounting in the future. And a lot of that is not really accessible through your standardized finance interfaces. And again, the blockchain doesn't really care whether you feed it with finance data or whether you are tracking procurement streams or whether you are tracking raw materials or whether you are tracking services. It can cover it all. So I think there's a huge potential there. And I actually think there's a limit to the efficiency and the transparency that can be gained with the current technologies that are in play, because they are limited to the confines of a single organization. So I think that's where we need to go.
Yeah. You also get in on some of the benefits of automizing finance. You mentioned more transparency and more efficiency. Are those the primary benefits of this?
Well, I suppose yes, because you can basically make a number of processes redundant. But I think the key is insights. And it's having trustworthy single source data, not just within one organization, but across ecosystems. I think that's really relevant. And again, if you look at something like ESG, this is the expectation that is something that organizations can deliver. And I would just hate to imagine everyone applying double bookkeeping standards on everything you need to deliver for your EU taxonomy reporting. I think that would become very expensive and very process heavy for everyone to do. So I think we have to look for different solutions for that.
Yeah, I agree completely. And ESG is that is a finance problem in many ways, how to deal with what is coming there. And I agree that it's in some ways it's a new start for accounting also, or should be at least. We'll see what happens. But that is gonna be really interesting. And companies are also now sort of as a preparation for the upcoming CSRD implementation, bringing ESG into finance and anchoring it there. So there, but there are loads of interesting questions also from a research perspective in terms of measurement, in terms of dealing with or extracting or capturing the data governance, all that stuff, and also management, performance management. I mean, one thing is to report it. We spent millions and billions of dollars on reporting this, but does it actually make a difference? That's the real question, right? And therefore, I think the performance management agenda. I mean, how do you actually make people reduce carbon emissions, for instance, through the right incentives and the right trade-off between cost and carbon emissions? I think being able to measure and report and discuss that is going to be really critical, and that is, in many ways, an accounting problem.
Yeah, agreed.
How about, Ulrik, some of the classical systems like SAP or Oracle? Can they still compete and offer this kind of automation that all these new technologies might bring?
Yeah, I mean, I'm a lifelong fan of ERP systems. I believe that they are important, and I think they are getting better all the time. So, I mean, even in rather small scale organization, complexity is the key to what you need. And I think most organizations that have a little bit of supply chain and a little bit of cross country or cross region activity will need to have a pretty sophisticated ERP core. So I think they will always be relevant. And I think actually that cloud has delivered a much easier deployment strategy for ERP systems. It's easier to use, easier to access, nicer to look at. I think that the compute power that most of these platforms have integrated into their core means that you don't have that separation of process and data that you used to have. You know, you used to have your ERP system, and then every 24 hours you would have your information in your BI systems. I mean, in most cases they are now embedded. So basically, you have process and decision support integrated into one flow. So I think that's a huge improvement. I also think that this kind of single ledger or a single journal kind of thinking that most of the systems are based on actually opens up for a huge degree of efficiency, not just by automating, but actually by making processes redundant. And again, it's better to get rid of a process than automate it. So I like that a lot. And then I think actually the integration between finance and then all of the business processes, we see that these ERP suites are getting more and more adaptable to actually fully support that. Because I mean, in the old days, we had these monoliths where the business really had to fit into a standard system. And the core business often didn't really want to. So you would have finance fully supported by the ERP system. You would have maybe warehousing and other stuff pretty well supported. But when you got into production or maintenance or projects or whatever, it would only be a small part of that which were actually in the ERP core. Now we see, first of all, that the core has become smaller and more concentrated about where you really need the integrations, but also the ecosystems of ERP systems have become much more adaptable to really getting sort of best of breed scenarios fully integrated. So I think businesses are being tied much better together now by the ERP systems than ever before. And I think that's a good thing. So I actually foresee that they will continue to exist. But I'm kind of keen to see how they will open up for the blockchain discussion. And then I really hope that people become better and organizations become better at really knowing what they want from their ERP systems. Because to be honest, ERP systems has been better than they have been used for many, many years. So basically we have a lot of organizations who have a really good ERP system, but they have never really asked it to do what they needed to do. So the steering model have been unclear, the business model have been unclear, and because of that, they have an ERP system which is really suboptimal, but it's not because of the system, it's because of the governance, it's because of the requirement setting and the adaptability of the organization into that. And I think with all of the millions being invested in these upgrades, I really hope that organizations will actually focus on getting those benefits and not just taking what they had and transfer it to a new version of their system, because that's probably not going to benefit, and the business case will be kind of slim.
Do you have some practical examples of companies that you've engaged with who use artificial intelligence or blockchain in their day-to-day finance?
I think we have quite a few examples of machine learning and similar things being used, particularly in planning. I think AI is still mostly used in scenario development and in other areas of the business. So I think it's still waiting its turn. I think what we will see, and generative AI is probably going to be the thing really driving it, is that whole finance shared service center thing will kind of get a renaissance, and how can we actually fully automate that with the finance factory kind of thinking, and then the generative AI to be the user interface, the interaction point. I think we will see that soon, but I don't have any concrete examples of it done in reality.
Okay. When it comes to using the blockchain technology for accounting, for example, does that require that the company makes some kind of Bitcoin, or is that completely unrelated?
Oh, I think there is an understanding that blockchain and Bitcoin and cryptocurrency is the same. It's not. Blockchain is an underlying technology which can basically be used for a number of things. You can choose to have a currency in it because you want to have a value on something, but in general you can use it to basically post information across ecosystems in a trackable and traceable way. And I think what we will see in a lot of cases is that is actually the application that businesses want, and not the cryptocurrency part of it. But it's so to me it's two completely different things, but they can merge, and in some instances it will probably be beneficial for them to merge within these ecosystems as well. But it's the underlying technology that's interesting.
Morten, can it be difficult to succeed with digitalization in a company where the employees are not very comfortable with technology, data, and automation, for example?
I think that's a really great question, because now we're also coming into some of the explanations for why it can take a while before organizations actually embrace new technology. I think also it goes way beyond being comfortable with technology or not. Because this is truly transformative what is going on if you implement some of the great things that Ulrik also talked about a little earlier. It also means that, first of all, there are new roles emerging for controllers, for instance, or management accountants. Of course, the data scientist role emerges, and the question is, to what extent should a controller have these capabilities, such as to what extent do you need to understand data architecture, to understand IT systems landscapes, to handle data extraction? What about statistics skills, the skills you need in order to really get the full benefit of these technologies? So that's one role that is emerging and is important. But there is also perhaps a more subtle development about what's called finance business partnering, because as soon as you start using technology to automate all these dull transactional processes, you get more time to the fun stuff, and the value creating stuff, which is analyzing big data in short time. It's identifying performance improvements in the company, but also entails suddenly that you interact with the business, which means that you need to understand stakeholder management, and you also need to understand, have some certain personal skills. You need to be able to be a good problem solver, be a good communicator, get out of the office into the business. Different skill set, and a skill set, by the way, that is increasingly valuable, not just in controlling, but in a lot of different positions, because that is what it requires to actually exploit these technologies. So I think that's the thing about the role that is really evolving, also because business partnering also becomes much more insightful due to all the technologies that helps understand data and create insights from data, machine learning, for instance, and other things, converting that into real business insights that you can use to actually improve the business and create value. And then I think in terms of organizing the finance functions, it's also a matter of finding out how you best organize it, because that's also becoming a more and more organic function with interfaces to, I mean, we talked about IT is the most obvious based on the discussion we have now, but also to the ESG communication department, to the line of business. So the question is, how far should finance go? And there's sort of different ways of building data science know-how, or 3 ways you could say. You could start by training your controllers. I mean, probably would be a good idea to start with ones that have flair for technology and IT and an interest in it, and then develop what could be referred to as some companies use them as mediators. So essentially, you get somebody who can bridge through these interfaces to IT. The business part bridges out to the business, and then you have somebody bridges to ESG and so on, and then you have core controllers who still, drive automation of transactional processes and do all the stuff that's not automated yet. But you can of course also hire data scientists and create that position specifically, or you can even have a whole unit. I mean, your organizational unit, like Lego, as I mentioned earlier, have an automation unit that is anchored in finance. Automation and process mining unit, and there you have a whole organizational unit that is dedicated to this, and that is of course perhaps the most wide-reaching way of dealing with this.
Yeah, so if a company is struggling, training and hiring more competences is really something that can move the bar if a company is struggling.
Maybe just to add a little bit to this, I think it's really interesting. It's also that this is also a little bit about identity, because I mean, finance has been the leading language in organizations now for many, many years. The finance department, the CFO, gets to decide and put into language when we are doing good, when we are not doing good. They are the interpreters of value in the value chain. And with the emergence of ESG, they are actually in a situation where they need to learn a different language. And that's kind of interesting, and it's a language that there's not the same kind of confidence in as the financial language. So that's definitely interesting. And then, as I mentioned before, the whole idea of thinking not in closed circuits within your organization, but thinking in ecosystems, thinking in infinite processes and traceability and transparency. It also sort of marks some of the true power positions of the finance organization. Month close. We have to have the quarterly review. We have to have all of these things where you can really do your P&Ls within confined spaces in confined time zones. It's an interesting thing, because if things become more open, more ecosystem based, and if we need to speak a language where finance is actually only, let's say, one dialect, but actually the main language is the full range of the business, there's a whole sort of schisma in what is actually the role of the CFO, what's the role of the finance function, and what is the domain of power. I think it's kind of interesting. I think also one of the reasons why things are not moving that fast is really, what is our role in it, and how will we fix it, and who are we when we actually work in finance, if we are no longer the purveyors of truth, because truth is now something else and it's spoken in a different language. I think that's really interesting. It's a little bit philosophical, but I think there's something to it.
No, I agree. I think that's very interesting. Also, as you mentioned power, there's also, where is this anchored? If finance does not siege this agenda, then the CTO, whatever it's called, could sort of slide into the finance domain if it's no longer, the conventional setup that we set of rules we are playing.
Yeah. I also think, Ulrik, you're touching a bit on time to market when it comes to reporting, because all of this emphasis on monthly reports, maybe it will take 1 week or 2 weeks to make the monthly report, and then you can analyze it, and by that time it's already outdated. Why would you not want to automate that whole process and get a new report every single day that looks back 1 month or 1 quarter on a continuous basis. That seems much more efficient. You can make sure that it's transparent to other departments. You can get those reports out to sales, to planning, so you keep buying the goods that your customers are actually purchasing, and so on. It seems like a really, really valuable thing to get.
I think you could say that, I mean, the way that our minds are structured and the way our practices are structured, when we look back, looking at closed chapters is always easy. You know, what happened in chapter 9, what happened in chapter 10, what happened in chapter 12 is interesting, and understanding what happened from chapter 1 to chapter 12 is interesting. But when we look forward, why are we putting things into period in the same way? It doesn't really make sense. So I think that whole, you know, how do we make decisions? If we do it in chapters, then it's good, but actually the future is not really something we can put into chapters. So I think that whole kind of thinking is interesting. I think for the storytelling, for understanding things, you know, we have to organize. It's a basic way of our brain to work. But if we look forward, we are more interested in trend than in chapters. And I think there's at least an idea to thinking into how can we be better at adapting that kind of thinking. It's becoming very philosophical.
That's nice, and I think that there's actually, I mean, that's an interesting research agenda as well, because there's probably some cognitive explanation why we like that, but it would be interesting to see what happens when we break out of this and try to manage our business or whatever it is, without being limited by these periods that we've decided should be in a certain way, because that makes our brain happy. That's interesting.
What do you think, Ulrik, really characterizes the companies that are really automation leaders in this field?
If I can include, apart from, I mean, automation is one thing, but insights is as important. And I think the companies that in general performs best are companies that has, to be honest, strong leadership, both within finance, but actually as a group, because you need to have finance fully integrated in the value chain. So if you have a really strong CFO, but that CFO is not really, you know, engaged with the rest of the organization, then it doesn't really work. But companies that actually have that vision and that ability to lead across the value chain and make finance an integrated part will deliver better results. Then there has to be some amount of courage in terms of engaging with these new technologies and really going into them, and also being willing to rethink, you know, past structures and past ways of work. So I think that's a lot of it. I would imagine that we talked earlier about, you know, what is scale in this. I mean, really complicated organization will always have a tough time making things work. Not necessarily because they are complicated, but because the governance structures tends to replicate the complexity of the organization, and thus it's difficult to actually make decisions and implement stuff. But I would say that organizations who are able to fix governance, even though they are very complex, will typically also be the ones who can deliver the high quality digitization agenda. So it's about leadership, and it's about governance and courage. If you have all of that, then you will do fine. You probably need a little bit of money as well.
As usual.
Yeah.
We've talked about a lot of the positive stuff about automation, AI, and so on, but what worries or risks, Ulrik, do you experience that companies face when considering digital transformation?
Yeah, I mean, obviously, if you do it wrong, it will become expensive and it will become problematic. And I think, talking about stuff like generative and AI, we haven't yet seen how it's done right. But I think we can all imagine all the ways it can go wrong, because we don't really know what's in the box. And when we throw our questions in and we get our answers, how do we really understand what will come out of it and how it will work? So I think for these very cutting edge technologies, there's really there is the whole hesitancy we will have, but also we have to be very risk averse in that process. But again, in general, I think the biggest issue when adapting new technology is if you don't know what you want, if you don't know what your processes are, if you don't know your operating model, you don't know your business model, you don't know your performance model, then you won't adapt technology well. You have to have those things cleared. You won't be able to automate if you have like millions of process variants that you have allowed your organization to have. That's very hard to automate. So you have to have governance, you have to have the strictness about that to actually have those streamlined processes. And again, if you don't know what your steering objects are, you can throw all of the information into the world that you want to, but if you cannot connect them to the things that you want to steer, then it's useless. So you have to have a maturity on that to make it all work. And my worry is that actually quite a lot of organizations still have relatively rudimentary maturity on those areas, and they maybe don't want to invest in that because it's cumbersome before they automate or before they digitize. But in my opinion, they have to, and that's perhaps my biggest worry in terms of getting the adoption of this right.
What about you, Morten? Do you have any final thoughts on this or on the whole area in general?
Yeah, well, I think we have a huge responsibility. We talked a bit about the capabilities required, and things are moving pretty fast. And we, both us as an education institution and university, the employers such as Deloitte and others, because it's a lifelong learning experience. So we need to focus on developing the ability for future finance professionals to exploit these technologies in the best possible way. I can say at CBS, I'm responsible for the Kenmark in accounting strategy and control, and we are working on or seriously considering how we can incorporate technology in the finance teaching at the moment, and we hope that we can introduce a mandatory course on digitalization analytics in management accounting in the not so distant future, because we need that as a starting point. That's not enough, but that's a good starting point. And then another thing I would also like if we could expose our bachelor students at an earlier stage to some of these technologies, for instance in elective courses. Try to experiment with low code, for instance, which we haven't talked about, which is also a very nice way of, as they say, democratizing software development or coding or whatever you want to call it, and generative AI, as we talked about. All that stuff, expose them to it and see what it can do in a finance context, so they can, because if they can pick that up, then there are great opportunities for them in their future careers, but also for the companies that hire them going forward. So I think that's very important.
Ulrik, any final thoughts?
I mean, I think we're at a really interesting inflection point. I think for the past 3, 4, 5 years, we have had that whole wave of changes in the ERP core systems. We have had the rise of really powerful computing powers, which has led us to generative AI. And I think if we are open for thinking in ecosystems, business ecosystems, we actually have the technologies to support that as well. So I mean, this is really an age of opportunity in digitizing finance. So I mean, it's just go get it.
Go do.
Yeah, go do.
You heard it here, folks. Go get it. Thanks for listening to this episode. And Morten, Ulrik, thank you for being here with me.
Thank you very much. Pleasure.
Thank you for listening to Rig på Viden. I hope you learned something. And if you like our podcast, you can support us by following Rig på Viden on your podcast platform or by writing a review on iTunes. On LinkedIn, you can follow Andre Thormann, Benjamin Somofen or Henrik Foged Rasmussen. Take care.